Good evening, everyone. I'm Brian Trumbore with your nightly review for Thursday, May 16. It's 4:02 p.m. Eastern Time. Dow Jones finished down 42 points at 15,233. Down 0.3%. S&P 500 down 8 points to 1650, or minus 0.5%. NASDAQ lost 6 points to 3465. Gold $13.85, down another $10. Oil $95. 10-year Treasury, the yield fell to 1.88%. Consumer Price Index for April, year over year, only 1.1%. That is a 2-year low. Jobless claims suddenly spiked to 360,000. April housing starts disappointed, but building permits were solid. Walmart shares fell about $1.50. U.S. sales were down for the quarter. Kohl's finished up about $2.30. Better than expected earnings. Revenues weren't any great shakes. Cisco had a great report at the close yesterday, and its shares rose about $2.70. CEO John Chambers said, "I am extremely confident with the hand Cisco has to play." Cisco is seeing slow but steady progress in the global economy. Sales were particularly strong in the U.S., up 10%. Overall, Cisco saw a 5.4% increase in revenues, which came in above expectations. I've always liked John Chambers. Overseas, Tokyo's Nikkei fell, but just 0.4%. Japan's GDP rose in the first quarter 0.9%, or 3.5% on an annualized basis. That was much better than expected. That's very good. Exports rose 3.8% in the quarter. Consumer spending was up. Further confirmation that expansionary monetary policies by Prime Minister Shinzo Abe are working. The weakening yen is helping the likes of Toyota, but actual business investment in Japan declined a 5th straight quarter, so companies are still reluctant to invest in new plant and equipment, and deflation remains a factor. The key to more lasting improvement is going to be whether the benefits reaped by exporters from the yen's rapid retreat will filter through to the broader economy, kicking off a virtuous cycle of more jobs, higher wages, profits, and investment. That's crucial if Abe's gamble is to pay dividends. Now he's flooding the economy with about 1.4 trillion. The Bank of Japan is flooding the economy with about $1.4 trillion in 2 years. The Bank of Japan's plan to double the government debt holdings has sent the yen sharply lower. But economists say companies are still cautious about their future. The economists in Japan are confident the companies will also start spending this quarter. They better. So, I'm going to jump around today. President Obama and Turkish Prime Minister Erdogan had a joint press conference this afternoon in the Rose Garden. Erdogan looked surprisingly relaxed. It started to rain, showing once again how dysfunctional our government and this administration are. Like, did they bother checking the weather radar? Anyway, in his opening statement, President Obama talked of preventing future Benghazis, when many of us just want some simple answers. So around noon, right before the press conference, I'm watching CNN, and their excellent reporter, Jake Tapper, who they poached from ABC, broke the following, quote, "The U.S. Marshals Service lost 2 former participants in the Federal Witness Security Program identified as known or suspected terrorists," states a public summary of an interim Justice Department Inspector General's report obtained by CNN. The Marshals Service has concluded that one individual was, and the other individual was believed to be residing outside of the United States, according to the summary. The IG summary said that although the Marshals Service was giving known or suspected terrorists who participated in the Witness Security Program and their dependents new names and identity documentation, the Justice Department was not authorizing the disclosure to the Terrorist Screening Center, which operates the terrorist watch list that helps provide information to the Transportation Security Administration's no-fly and selectee list. Therefore, it was possible for known or suspected terrorists to fly on commercial airplanes in or over the United States and evade one of the government's primary means of identifying and tracking terrorist movements and actions. This is unfreaking believable. Different government law enforcement agencies not sharing information and intelligence with others has long plagued the U.S. government and national security apparatus, as seen before the 9/11 attacks and as recently as the Boston Marathon bombing. So in this case, this is Jake Tapper. The IG's office concluded that the 2 Justice Department bodies primarily responsible for managing the Witness Security Program, it's called WITSEC, the Marshals Service, and the Criminal Division's Office of Enforcement Operations did not involve national security stakeholders when admitting and monitoring known or suspected terrorists into the WITSEC program. So you give these guys new names and identities and don't tell anybody else. So they're running around on their new names, even though they should have remained on no-fly list. So you have Benghazi, the IRS, the seizure of the AP's phone records, and now this. That's a big story. After my nightly review yesterday, President Obama appeared before the American people, demanded and accepted the resignation of the Acting Commissioner of the Internal Revenue Service, Stephen T. Miller, as described by the Washington Post. In a brief but fiery evening statement in the East Room of the White House, Obama labeled the IRS's actions inexcusable. Americans are right to be angry about it, and I'm angry about it, he said, adding that he will not tolerate this kind of behavior in any agency, but especially in the IRS, given the power that it has and the reach that it has. In his remarks, Obama said he would seek to put in place new safeguards to prevent the targeting from happening again of Tea Partiers, and would work closely with a multitude of congressional investigations. He said today in the Rose Garden he will not go for a special counsel. He also suggested, this is last night, he might pursue a revamp of the laws governing political advocacy groups so they are less vague and we can have confidence they are applied in a fair and impartial way. The Inspector General's report did not find that IRS employees involved in the screening were motivated by a partisan agenda. Whatever. House Majority Leader Eric Cantor, Republican, Virginia. The news has, I think, awakened the public, beginning to raise questions in their minds as to the direction of this government, and really to whom is this government accountable. We are accountable to the families of the victims in Benghazi, Cantor added. We certainly are accountable to the taxpayers and the people of this country as to the actions of the IRS, and we certainly have plenty of questions and are accountable to the press in terms of its First Amendment rights and its ability to enjoy those and realize those. Okay, this. So yesterday I described how the Congressional Budget Office was lowering its deficit forecast because more revenue is coming in because of the improving economy, but also with the tax situation going back to last December, taking income early. So revenues coming into Treasury are up about $100 billion versus originally forecast, and then you have about $95 billion over the fiscal year that's coming in from dividends from Fannie Mae and Freddie Mac due to the improving housing market. So the deficit projection for fiscal 2013, this is actual 2012, fiscal 2013, which ends September 30th, has been lowered $203 billion from $845 in February to the Congressional Budget Office new forecast for May of $642 billion. But I said yesterday, before I had a chance to work this out for you, that longer term, the impact is pretty minimal. So my favorite economist, Robert Samuelson of the Washington Post, literally this afternoon, posted the following that is going to be in tomorrow's paper. There's a reason why I love this man, because he's saying exactly what I was talking to you about yesterday. In any other time and place, $642 billion would qualify as a lot of money. But in the Washington of 2013, it has been reduced to pocket change when the Congressional Budget Office announced that it has cut its projected 2013 federal deficit to $642 billion, compared with 2012's deficit of $1.1 trillion. There. And an earlier 2013 estimate of $845 billion, there was an almost palpable sigh of relief. The budget problem is taking care of itself. Congress and the White House can relax. No more self-destructive budget brawls, no more unpopular choices between tax increases and spending cuts. Can we get real? For starters, $642 billion is serious money. And despite the modest improvements of the latest CBO report, the basic trends in federal finances remain the same. From 2014 to 2023, the government will spend $6 trillion more than it collects in taxes. The budget never comes close to balancing. Expanding spending on the elderly and health care continues to strangle the rest of government. As a share of the economy, military and domestic discretionary programs drop about 40% from 2010 to 2023. So nothing of consequence has changed. A few numbers have shifted slightly, that's all. They moved in a favorable direction. Next time they might go the other way. What's also constant is the unwillingness of leaders of both parties, beginning with the president, to discuss budget choices candidly. So the latest deficit numbers, though interesting, settle nothing. They don't provide a roadmap for long-term budget discipline or resolve the debate over the short-term effects of deficits. They do provide an excuse for both Congress and the White House to postpone genuine discussion and decisions. That was Robert Samuelson. Well, he never actually says that they need to, that what my main complaint has been for months is that I knew the deficits were going to come down. Back in February, the projection was to $430 billion in 2015, and I kept writing that figure, saying how deceiving it was going to be, because then the deficits were going to take off anew. But this is the excuse not to tackle entitlement spending. And I don't think anything's going to get done now, and it won't get done until after the 2016 election, or unless there's some kind of crisis in between, and there very well could be. But the other issue that Samuelson doesn't bring up, but is alluding to, is this whole idea of the net interest expense that I've been talking about ad nauseum, especially in my Week in Review columns. And here we are for fiscal 2013, 223 billion net interest expense, because on our 16 trillion plus in debt, we have these very low interest rates currently. But at some point, interest rates are going to be normalized. And I've always cited this figure in 2022 of 795 billion in net interest expense. That was the February CBO forecast, and now they are revising it only down to 764. Now these numbers are going to vary wildly, as they already have this fiscal year. But these trends are going to remain in place. And let me just remind you that all of the CBO's figures are based on, from 2015 to 2018, GDP growth of 3.6%, but then declining for various reasons I will have in a Wall Street history column. GDP declining, according to the CBO, to 2.2% from 2019 to 2023. And as for interest rates, and I wrote all this back on February 22nd in my Wall Street history column, and I'm going to revise it in a week or two. Normalized interest rate environment that the CBO is using to make these calculations: between 2015 and 2018, a 3-month T-bill of 2.2% from zero today, and a 10-year T-note yield of 4.5% between 2015 and 2018, and it's 1.88 today. Between 2019 and 2023, interest rates continue to normalize, according to their forecast. 3-month T-bill of 4% and 10-year notes of 5.2%. So that's all for today. I'll be back with you next Monday. Read my Week in Review column. I post it very early Saturday morning, like around midnight if all goes well. Have a good weekend.